future. We're talking real money.
Every now and again, we all need a little help with something in our life, and often that something is dealing with money because, well, there's a really good reason for that. So much of our life involves money. We earn it. We are particularly good at spending it, sometimes way too good. Enter Dave Ramsey when you're too good at spending it, and then trying to put it away so that you have some when you either don't want to work or are no longer able to, and to cover the expenses that life throws at you down the road. So if you need some help with those kinds of things, we love to provide the help, and we've both been doing it. Well, you combine our time giving money help out, and we're really old. I mean, that's
don't do that, please.
That's like 75 years between us or something ridiculous.
Ridiculous, yeah.
So give us a call at 855-935-TALK, 855-935-8255. I'm Don. I'm in Florida in my studio. Tom is now in Duval, Washington, in his studio and Model Military Aircraft Museum.
Yeah, both of which need work. So I will do some more work.
There's a little work necessary.
Yeah, that's still there. Yeah, okay. Trying.
It's working a little better now.
You know, I find these numbers fascinating. And yes, I know we've got calls. We'll get to them here in a minute.
You find 855-935-TALK fascinating?
It's a heck of a number.
Actually, he likes it better when it's 855-935-8255.
Yeah,
he does not
I got my rotary phone.
He doesn't like to mix his letters and numbers.
That's a good point. I think it's a third grade thing or something,
right? It's a thing with him. You know, they actually give kids medicine for that these days, but Tom couldn't get it.
I can't afford it.
He has an ADD kind of thing.
I find this fascinating, these surveys of wealth and how people gain wealth, because now this is not a good thing. This is not a good thing that half of America owns basically all the national wealth. It's 97.5% of the national wealth.
Wait, so half of it owns 97.5%. The other half owns 2.5% of the wealth?
That's right.
That's literally nothing. I mean, really, when you divide it up over 170 million people.
Yeah, we got 341 million.
That's like $1.45 a piece.
No. And guess what? The bottom, of course, has what? A lot of debt.
Yeah.
Not just mortgage debt, a lot of debt.
They're calling
I'm
Dave
more
Ramsey.
Fascinated in how people got to be in the top half. What did they do to make it there? Right? Because a lot of people have moved. That's one of the great things about America.
Maybe they invested better? I mean, I'm guessing. I don't know the answer.
Work harder, but then there's something you missed in between work and investing. No, saved. Because you could really be a great worker. You could make a lot of money and not save anything. That I see that happening. But yes, they worked, they saved,
like that guy on White Lotus.
Which guy? Oh, the hedge fund
one who
guy?
apparently didn't save enough because he's going down. And look at his vacation.
Are you talking the hedge fund guy that?
Yeah, I'm talking the hedge fund guy.
The suicide? Okay, yeah. All right.
No, shh. Did we warn people about spoilers?
Yeah, okay. But, okay, let's just finish the thought here because it's fascinating. Yes, they worked. Yes, they saved. And then they invested because much of their wealth is in U.S. equities. Yes, some of them made money in private business holdings, which is a substantial as well. And then real estate. They bought homes. They held them homes. And by the way, here's the other thing they did. They've paid off their mortgages, unlike many other people as well. Now,
does this piece from which you are drawing all of this incredible knowledge, does it mention where the biggest percentage of this wealth was made?
I don't remember that, no.
Okay. I just was curious whether it's made through a business
those things.
Or through investing. So it's
investing is more than business, than real estate. Yes,
then
those
real estate.
Areas.
Okay.
Correct. Yeah.
All right. Yeah, because I was wondering, because you look at people like Musk, and that was from business. 855-935-TALK. Call us.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
All the things you do with your dough, we'll talk about on this show. And it's really easy to talk with us. You just call 855-935-TALK, 855-935-8255. And let's head to Toronto. It's Ontario instead of Quebec. Here we go. Josh, welcome to Talking Real Money.
Hey, guys, it's actually Jeff from Ottawa, but I'm in Toronto right now.
Oh, you're Jeff from Ottawa
You're
again.
tricking us. Come on.
Okay.
I'm in
I see. He did say he heard the name wrong. Jeff. Hello, Jeff. What's new?
How are you doing, guys?
Good. Thanks for calling.
We sold all our loonies, so we're feeling pretty good.
Yeah. Well, I heard you guys had all your lines open, so I had to help you out a bit. So I've got a question about high dividend yields.
High dividend yields, my favorite topic.
Yeah. Yeah. So I know how you guys feel about them, but I just want to know, like, more specifically, like, besides the owning individual stock risk to the rationale, what concerns you the most about high yields? Like, what makes it, I guess, fool's gold, so to speak? Like, your specific reasons. I know you guys have talked about it in the show in the past, and I'm really interested in it because before I switched my portfolio around to ETFs when I was in high dividend yielding stocks, my advisor was pushing them heavily, mostly because they were high dividend yield stocks. So yeah, just thought I'd ask you guys that.
Let me give you mine, and then Don give you more.
Yep.
My big picture problem is as following. We want you to be massively diversified in lots of companies because we don't know which ones are going to be the most productive. When you limit how much you own, you limit the opportunity, and Don's going to talk about why companies generally are high dividend players, but you just have reduced that basket greatly, especially if you're only getting the higher dividend. I mean, any sort of dividend payout strategy, you're reducing how many stocks you hold, but if you're really just searching for a smaller part, you've reduced that even further. Don?
Yeah, it's a multifaceted question. And I generally start at the small picture end, which is, generally speaking, if a company is paying out a high dividend, it's because they're just out of ideas. They don't know what to do. They don't know what to do with the money that might make shareholders more money, so they're just giving it back. That's one of the reasons you have a high dividend. The other reason you have a high dividend is because a company's in financial trouble. And often high dividend stocks are high dividend stocks because they're about to stop paying the dividend. And the rest of the world says, this dividend is threatened, so I'm not going to own the stock. That causes the dividend yield to rise and puts them in even more precarious shape. But generally, though, the biggest reason of all is it's a terrible reason in and of itself to buy a stock, because we're buying stocks generally for their capital appreciation, and we're buying bonds for dividend yields, for income streams, for the stability those income streams provide. The income stream in stocks does not provide stability, and that makes them a bad bet. Now, the only reason they're a semi-decent bet is because some of those stocks will end up to be great value stocks, that they were only going through temporary hard times. The issue is separating the temporary hard times from the permanent hard times.
Right. And my advisor was sort of pushing, when I wasn't too comfortable with them just based on the fact that they had high dividend yields, the stocks that I was in. And so I sort of pushed my advisor a bit, like, well, why are you so focused on yields? And I remember him, it was a long time ago, but I remember him saying that, the companies had a lot of good cash flow, so therefore they were able to pay out the yield. So, I know it's
let me just give you this. Let's talk about one of the companies with the biggest cash flow. Would you agree that Apple is one of those?
I would say so, yes.
Yeah,
Giant cash flow.
Their margin, some ridiculous, like 60% or something crazy.
But they still pay a very, very small dividend. They didn't even used to pay a dividend because Steve Jobs believed he could make shareholders more money with the money if it stayed in the company and went into R&D and acquisitions. So that is a spurious argument, and it might apply to a couple of companies. But again, what we're trying to do is pick out the few winners, and we don't believe anybody has that skill set.
Yeah, exactly. Yeah. No, it's just it's an interesting topic because it is a little bit. I guess it provides a little bit of emotional or psychological comfort knowing you've got that that tap on, so to speak, where their money's always coming in, regardless of whether the stock's going up or down. And I think that's what I was sort of being sold on. I obviously don't believe in it now, given that I'm more financially literate, but it's something, and I know friends and family as well, they love them, and their advisors push blue chip high yield stocks on up in Canada, at least. That's very common here, and well, like I said, people feel safe even though they're not diversified at all, but I guess they figure, well, if I'm going to own individual stocks, I might as well have those with high yields, So
yeah, let me just share a little history. If you go back to the 2000s and look at the highest dividend paying stocks back then, let me just give you a list of some of the highest dividend paying stocks in the 2000s. General Motors.
Know where that went.
Bankrupt in 2009.
Yeah.
J.C. Penney. One of the highest, bankrupt. Kodak had a huge dividend.
They're still in business, but I think they're still around.
No, they actually they declared bankruptcy.
Okay.
No, they declared bankruptcy. They reorganized. Radio Shack had a great dividend. Barnes and Noble had a huge dividend.
Enough. But here's the other part of all this.
Washington Mutual had a giant dividend.
Yeah, no surprise there. Company that I'm very familiar with. Here's the other. So for me, it is one part reducing the number of companies you hold. Part two is it always feels to me like people think they're getting something for nothing. This is you just need to know about this. It's a trick. I don't buy that stuff because I haven't been able to find something for nothing in a very long time. Let's put it that way.
Okay, all right. Thanks for the call, guys.
Jeff?
I'm glad you could hear me. I'm at a baseball game right now, so I'm glad the call went through all right.
Oh, who are the Blue Jays playing?
Update?
Who are the Blue Jays playing today?
Baltimore. Baltimore's up 7-4, top of the fifth.
Baltimore's good team. Sorry.
Yeah.
All
right.
Well, we'll see how it goes. Anyway,
wish you well.
Good luck.
Enjoy the game. Thanks for
calling
during the
Molson
game.
on us or something. Yeah, sure. Why not?
Do they serve hot dogs? I don't know if they do anymore because they're too American. But I hope they.
Question.
I hope they didn't like boo us at the national anthem or anything. Probably did.
They did that, in the hockey thing.
But that's hockey fans.
That was right then too, the middle of all that. So I don't blame them.
That's hockey fans. Hockey fans are a little tougher than baseball fans.
You're just be glad you got out of there without getting beaten if you're wearing American stuff. Yeah. Then probably right.
Yeah, I heard something on the radio today that said the whole premise of baseball is I throw the ball, you catch it. There you go. That's baseball. 855-935-TALK is our phone number, 855-935-8255. And it's all about something so important. Deal with it all the time. And you get bad advice all the time. Money. It's too important to treat this way.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
The phone number again. You ready? 855-935-8255, which spells talk. And we have lots of lines open. Love to answer your questions, help you through your problems, do whatever we need to do to make your financial life better. I'm Don McDonald. Tom Cock is over there hanging out in his new studio. He's so excited to be in a new room without the smell of bleach. And let's go to Florida. Corey, welcome to the program.
Hi, Don and Tom. I had a question. I have a variable annuity that I bought in 98. I'm 72, and I have never touched it. But I did inquire a couple of years ago about how much I would get a year, and it turned out to be maybe about $8,000 a year from it. But my thought is transferring it over to Vanguard to a retirement fund. And I'm in the process of doing that, but I'm on the last step, and I'm wondering if that's the right thing to do.
Well, it's not the wrong thing. I can tell you
so
that
you have
much.
you're out of what we call surrender.
She's way out of surrender from 98.
Way
Oh
out.
my gosh, way out.
Yeah.
Whose variable annuity is it?
Transamerica.
Do you know which mutual funds they use in there?
I did. I think
Yeah, it doesn't
Morgan
matter.
kind of stands out. Oh, J.P. Morgan Asset or Moderate Growth.
Yeah. Okay, that's J.P. Morgan funds.
Yes.
So yeah, here's the problem: you're paying high fees for the funds, and then you're paying ridiculous fees for the contract. With really little or no benefit. Is this variable annuity? I bet it's inside a retirement account, right?
Well, it's been something on my back really bad, because when I bought it, my financial advisor at the time advised me to transfer over my IRA CDs over to this annuity.
Lord.
And then,
So it's in an IRA. Yeah.
months-
So good news. The good news is you don't have to pay any taxes.
No,
It'll
it could
be a
just
transfer
direct,
over.
Yeah.
It'll be a direct transfer. And yes, we now, I think both of us are of the opinion that this is the right thing to do.
Oh, good. Okay, I feel better. Then I'll finish up on Monday. I have to get it notarized and get it sent in.
Yep.
Okay, I'll do it.
Your fees and expenses on an annual basis will probably drop from 3% per year to 1/10 or 2/10 of 1% per year.
Well,
You can
that's
do the math
thing.
on that one.
When the market goes down, it drops so fast, but then when the market goes up, it just inches. It doesn't produce much.
Yeah, part of that is the high fees. Part of that is the high fees because the insurance company and the money managers are always making money. So when the market goes up, they're taking a pretty fair chunk of it when it's going up, and then when it's going down, they're still taking that same fair chunk of it. So it makes the downside look worse and the upside look worse.
I want to add one thing here, because you said this was your financial advisor. This was your financial salesperson. So we need to be clear on that. They're not advising, they're selling. You're doing the right thing. You get that move to get it cleaned up, as Don said, saving a lot of money. Ready access is just going to be a lot better for you in the long haul.
And a much more honorable company.
And
thank you, Corey. Yes, ma'am?
I want to say that I don't know if you remember the caller, James, where he thought Don was Tom and Tom was Don. And I was the same thing when I first started listening to you. I'm like, when I was surprised when I saw the pictures and who was who, I picked the wrong people. I thought.
I don't know how to take that. I'm not sure how to take
Well, apparently your voice sounds
so
more like a
weird.
Don voice. And mine sounds more like a Tom voice.
I don't know, but I appreciate your podcast. I really do. They're so helpful.
Thank you.
Well, we appreciate you a lot.
This
Thank
is
you
Don,
very much.
and I'm saying thank you right now.
Just
really,
be quiet. Go back to your laundry room.
Thank you.
Thanks, Corey. Bye-bye. 855-935-TALK. So easy to do. Just really easy.
You saw me get excited, right? When I found that file. Do you know what that file is?
I didn't want to ask you because I thought that was such a little inside the show thing. See, I see Tom on a video monitor in Seattle, and he sees me. And during one of the breaks, he's holding up a folder and just like jumping up and down.
This is all of the work that was done on my old house. I'm working on my taxes now. This would be stuff I can deduct from the cost basis. This is like
this is six figures
money.
in deductions.
Oh yeah.
Oh, that means more money in your pocket. Well, we're talking real money.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
Well, some weeks we just get a ton of calls, like last week. We got a ton of calls last week, didn't we, Tom? I think we did.
10 in 2 hours.
Yeah, that was a very, very busy day. Today,
Yes, it was.
a little less busy. I think we're at like
Three.
Yeah. In an hour and a half.
But we had one in-studio visit, which rarely happens.
What, from the folder full of tax deductions?
No, my wife came in and watched the show for a few minutes. I always wonder if she even knows I do one. So, yeah, she
yeah, well, now she does that. Well, you were in the laundry room. She had to know you were in there not doing laundry.
That's true. My daughter, today when I told her I was moving, she's like, why? I said, because I didn't really like doing it in the laundry room. She goes, I got kind of used to you being in there.
Yeah, it means okay. I got out of doing my laundry. Dad, here, can you do my laundry? While you're in there, would you mind running a load for me?
For full disclosure, my wife is the one who put up the sound debating, whatever you call these things in here, too. I don't know what you call them.
I knew that.
Yeah.
Because I know she's far more handy than you are.
She is.
Yeah.
This would have taken me 2 years. Anyway.
You were confused even to how to put them up. You thought you had to build them from scratch. You thought they were an IKEA kit.
I thought they were.
855-935-TALK. That is a telephone number, believe it or not. And that number brings you to us on Saturdays as we talk real money with real people. Well, I guess those of you who send your questions in at talkingrealmoney.com are real people.
Yes, they are.
And we do have questions from some of those people. Little less spontaneous for me. You've already read the questions. I have not.
I know. I have. All right. This is from Scott in Bladsdell, New York.
Okay.
I'm familiar with Bladsdell. He says, I've inherited
an
IRA.
You're not familiar with cities. It's okay.
That's a good point. I have inherited an IRA from my mother worth $20,000. I will be required to, he says, make RMDs. I think it means take RMDs from this inherited IRA due to my mother's age. I'm only 54. So just to stop there, it has nothing to do with age anymore now when you inherit an IRA, unless you're the spouse.
You're the spouse.
You can move.
It's
then
only
you
a
can
spousal
put the money
inheritance.
Yeah, correct. Otherwise, 10 years, got to get it out of there.
Mm-hmm.
That's the rule. Then he asked, can I convert the entire balance from this inherited IRA to a Roth IRA I already have? The answer to that would be no. You cannot do that. You cannot take an inherited IRA and put it into a Roth.
You got to pay the taxes. Mm-hmm.
Yeah, got to pay the taxes. He says, can I pay the tax on the cash with cash I have had? Yes, but you can't just take a bunch of money from an inherited IRA and move it into a Roth. Can't do that.
No, okay. I'm sorry. I was kind of confused. Yeah. What was the question again about?
Well, can I convert the entire balance from this inherited?
But what was the other part about taking cash?
Well, no, he was saying he has cash to pay the taxes.
Oh!
But you can't convert an inherited IRA to a Roth.
Right.
No,
you can convert a regular IRA to a Roth IRA.
Correct. Yes, that's right. Yeah.
And pay the taxes.
Yeah. He says, would this conversion he was asking about satisfy the RMD requirement?
No.
As
a matter of fact, conversions never satisfy the RMD requirement.
That's right.
Even with a regular IRA.
That's right. Yeah.
So actually, here's the thing. We get so caught up in taxes. You got a $20,000 bonus.
Yep.
And you can wait 10 years.
His mom died. That might not be a bonus.
Yeah, but it's bonus money in life.
Yeah,
it's not like we hope to be rewarded for our family members' deaths. I don't expect my mother when she goes to leave me money, because I know she won't. But I don't want that. But the thing is that you've got 10 years to pay this thing. It can sit and make money for you for a decade.
Yeah. He then adds, I'm not eligible to contribute to a Roth IRA in 2026 because I retired 2/27/25 and do not plan to have any income other than rental income, with the exception of what I earn from 1/1/25 to 2/27/25. So you can make a contribution for this tax year.
Yeah.
And he says,
well, wait a minute. What's the 27/25? Yeah, you can still make one for 26.
Correct.
For the 25 tax year in 26. Tax year 25.
Any suggestions, he says, if I can't convert this money to a Roth IRA?
Just let it continue to grow and pay the taxes later.
Invest it properly and take it out a tenth of it every year.
The other thing you could do is any earned income in the course of the year, even if you take on a part-time job that makes you a couple $100, is going to get you the eligibility to contribute to a Roth. So if you could find some way to convert income to earned income or get a part-time job, you're set.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Okay, I just went through the receipts again. You know, the
What?
biggest receipt I could find for my house improvements, you know what it was?
A roof?
No, okay. Actually, this wasn't the biggest. It's number 3, but I thought I'd mention it because it was for you. So when I paved the side of the house,
for the
which got used for about
if it wasn't for that,
45
I don't think the place would have sold.
Probably not. I'm sure they're using it
like
right
that.
now. So, anyway.
We have some callers now. I think
then I will shut up and get out of the way. Yes.
And I'm trying to figure out which order to take them in. Should I take them in the order of the person who called and then hung up and then called back, or I'll go? Nope.
You leave. You get. I don't know. You leave. You got to get
All
back
right,
in the
then
back of the line.
we're going to take them in this order. We're going to go to Lake Stevens. And Terry, welcome to Talking Real Money.
Hi there. Hey, don't give me a hard time about this.
You need to talk to Tom. Tom can be very cruel sometimes. Very cruel. Go ahead. Sorry. You got an annuity.
So I've got an annuity. It is supposed to mature like this month or next month, which is good. Mm-hmm. They told me, and from what I read, that I never lose my principal that I put in. I figure they've been paying me on my minimum distribution about 5 or 6%, which is fine. I'm wondering, considering the fact that it's not supposed to lose the principal, if the market goes down and they've still got to pay me my minimum distribution, who's going to lose money here?
The insurance company temporarily.
Oh.
Not you.
That's simple.
This is a fixed. Well, okay, first, that's based on the assumption that this is a fixed annuity. Is this a fixed annuity? It
You're
pays
getting a certain
stated
amount.
rate.
Yep, rate.
Well, let me put it this way. I pretty much trust I got it through the Boeing Credit Union, which I belong to.
That doesn't mean anything.
No, but I wish BECU and other credit unions would stop selling this stuff, but they sell it because of the big commissions. Here's the thing. Because it has a maturity date, I know it's a fixed annuity. Because it pays you a 5 or a 6% rate, I know it's a fixed annuity. What you're doing is the insurance company is taking on the risk. They're paying you a portion of what they expect to make from the money. Their expectation is based on decades of returns, and they know that they have a pretty good chance of making between 7 and 10% per year without really taking all that much risk. That they'll average that. They'll pay you 5. They've got a really nice margin. Sometimes their portfolio isn't going to do as well, but they have a portfolio of hundreds of billions of dollars, or at least tens of billions of dollars, depending on the insurance company. And that portfolio is so well diversified, they're not going to take a big hit. They're not too worried about this.
Is that what you're worried about, Terry?
Okay.
You will not lose money, but you're leaving money on the table because they get to make it and they give you a piece of it.
Yeah. Well, like I didn't know that it was an annuity until I probably still could have backed out of it until the guy says, oh, by the way, when I was signing the papers, this is an annuity. And I'd listened to your program before and I already realized that, annuities were not a good deal in your view.
Well,
so,
at least this is the best of a bad bunch.
Pardon me?
This is the best of a bad bunch. So a fixed annuity, one, it has a certain time factor, so you can get out without a big surrender charge once they mature. And second, you're not you knew what you were getting into. Some of the others, the indexed annuities and the variable annuities, are very misleading. This one is pretty clear cut. So you have the best of a bad bunch, but as it matures, you really should make this a part of your portfolio plan, and then don't go to a BECU. Go to a 100% always acting as a fiduciary advisor and get a plan.
Yeah, and that's the thing. The thing you should take away from this is, while credit unions are owned by you and other members, they're still profit enterprises, right? And so they have decided, as Don said, to hire brokers that oftentimes sit in the lobby and sell these kind of products. So shame on them for doing that. I really wish they would clean it up. In fact, I used to have a pal who was the head of a large one, and I used to chide him a little bit. He said, "We're getting to that." Well, yeah, when are you getting to that? So, but this is a good piece of advice.
The money.
Yeah, this is a good piece of advice that credit unions, while having your deposits there, maybe borrowing money, might get you a better deal. Not so much with the investing side.
Yeah.
Wish you well, Terry.
It's yeah, thank you.
You're very welcome, sir. Thanks for calling. 855-935-TALK. Seattle's next. Sam, you're up. Welcome to Talking Real Money.
Hi there, and thank you very much. Hey, my question to you is, I don't need the money, and I have been investing in VU. And what other Vanguards would you recommend? This is money.
A lot.
Okay,
because that's one very limited portfolio.
And
I have BT Wax, but I want to get out of where I'm paying capital gains.
You're owning a lot of the same stuff there too.
Yeah, I understand that. And my 401 is in Fidelity, manages it, and it has the bonds and such. But this is my money that I probably will never need.
Why not? Why not simplify your life dramatically? I mean, if you're at Vanguard, you just want to stay at Vanguard, take VT Wax, take VOO, and turn them both into VT.
Yeah, easy, good fun, low cost. Yep, V is in victory, T is in Tom.
And if you go from VT Wax to VT, you will not have a taxable event.
There you go. That's
Same
what I'm
stuff.
after. Yeah, I got nailed this year on mutual funds with Fidelity that I have, and because my 401 was with them, and I thank you very much.
You're very welcome, and thank you for calling us. And now, Patty, you are up next. Welcome to the program.
Hi, thank you. Can you hear me okay?
We can. Thanks for calling, Patty.
Like your enthusiasm.
Yeah. Okay. Oh, yeah. So I am wondering if my husband is not eligible. He had W-2 wages last year, but not working for a company that has a 401k. Is there any way to do, I've heard of these backdoor Roth IRAs. I don't know if he's eligible for that.
Okay, well, do you have income?
But I've maxed
Are you still working?
I do.
But he has no income, is what you're saying.
Wait. He said he has no W-2 income.
He did. No,
okay,
he did last year. He did.
Okay. But he didn't have a 401k.
He could do a regular Roth.
And what's your combined?
401k.
You could do a regular Roth. There's no reason you shouldn't. You should be able to do a Roth.
Unless your income as a couple was higher than $270,000, then you'd have to do the back door. Then you could just do a regular old Roth IRA. But for 2025, you have to hurry because you have to have that done by April 14th or 15th. So you're running out of time for this year. I mean, for tax year 2024.
I email this morning. So I will.
Oh, she's with Roxy.
You're working with Roxy.
Yeah, but I just since I was listening and you guys didn't have any phone calls, I was like,
thank you. Yeah, we love Roxy. Thank you. Take care. It's 236,000, Tom.
Okay, couldn't remember the number.
236,000.
But otherwise, just do the regular old Roth. Sure.
Do the regular old Roth. Thanks for the call. We'll be back.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
So Patty's was a pity call. It was Patty's pity call.
I take them
feeling
anyway.
bad for us.
Sure.
But she works with Roxy. Roxy is like a superstar.
She is. Indeed.
Roxy is one of our advisors at Appella, and she's just...
And she's been on the podcast many times.
She's been... she did the Q&A with Tom, but I mean, as an advisor, she's just killing it.
She is.
She's
just bought her first house, by the way.
Yeah. Well, and her story is such a great one.
It is.
I don't want to embarrass her or anything, but I mean, she went to work for us many years ago on our support staff.
She did.
And she went and got all the training and did all the things necessary to become an IAR, an investment advisor representative. And she is just her clients love her. She's building an incredible business with us. And I just think the world of Roxy. She's terrific.
Totally agree. spoke at retirement.
Not that the rest of you are bad.
Kind of bad compared to Roxy, pretty much. But
yeah, when we compare you to Roxy, sorry. It's just no
tough
comparison.
all over.
Yeah.
Sorry.
You have anything else you want to add before we end our show?
Yeah, I do. I want to again mention that if you're listening to the podcast, I still have one more meeting in Arizona on Monday, the 14th of April. You want to meet with one-on-one, whatever you want to talk about,
the 14th
go to
of April.
That's right, talkingrealmoney.com. Click on Meet an Advisor. One more. So first person that gets in there,
are you doing the show on the 12th of April?
Yeah, I'll be doing that from Walla Walla while I'm there for the induction of my former soccer coach into the Whitman Sports Hall of Fame.
Okay. Yeah, but you won't be here for the 19th.
No, that day we'll be flying back from Arizona, so I'll be unavailable unless they can do it from the plane.
Oh, so it's your little Easter trip, sort of, kind of.
That's right.
Because Easter's the 20th.
It is. I will also mention that if you have not seen Tune Out the Noise, that is an educational financial film that you should take in. It's now available
about the stuff we believe.
Exactly. YouTube. You go to YouTube. It's free. It already has over 3.5 million views. Shows you how popular it's been. Write up about it in the Wall Street Journal today. And Don did a wonderful podcast with David Booth and Dave Butler of Dimensional about the film. So all those things are worth taking in.
On Thursday on all of our podcast partners.
Exactly.
So just find a podcast partner somewhere.
That's going to be a popular one. I guarantee it.
I'm pretty sure it will be. And it was so good. These guys, it's an amazing story about how they really stumbled upon the science of investing and a new way to invest that we've embraced for decades now.
Yep.
Decades.
I love it. Yeah.
Yeah.
So go take that in. I've been enjoying reading the comments at the Wall Street Journal about the article about the film. So it's good.
And if you would like to ask us some questions on our podcast, all you need to do is go to talkingrealmoney.com and go to contact us and either record your question by speaking it in or type your question. That gets sent to Tom, and we'll answer it on a future podcast or radio show. And the other thing you can do there is, if you'd like, I'm telling you, this is one of the best things we've ever done, and we've been doing this for about 15 years, and that is provide help to everybody. And people are shocked. What? You're going to help? You're going to help me for free?
Yep.
Yeah. We're going to help you.
Just talk to the chief of police at a town in Wisconsin this week, and a 42-year-old pipe fitter in Boston. Got them on the straight and narrow, and away they go. That's simple.
And you're not going to get sold anything. All you have to do is go to talkingrealmoney.com and click on the button Meet an Advisor.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. I think I need a nap.